All right, guys, welcome to our Apiary Fund Live. So I'm excited about going through and talking to you about the indicator section. When we talk about indicators, when we block things out, you know, if we were to put a pyramid on here, the most important thing is the price action, right? And if we understand what price does, then our indicators are going to help us really be able to figure out when to get in, when to get out, those types of things. And so as we add on to here, you know, price action, we can put trend, being able to identify that. We can put on here support and resistance, and then up at the very top here, the smallest box would be our indicators, because they all rely, of course, on what the price action is doing. And so if we understand price action, we understand trend, support, and resistance, those are the things that are really going to help us know when to get in and when to get out of our trades. If we can take whatever we're doing and we can find an indicator to help us buy at a low point and then sell at a high point, then we're going to be putting ourselves in the situation that we want to be in, where we're taking advantage of that price action and that movement. Unfortunately, as we get to trading, we try to outsmart or try to complicate the issues. And one of the things that we do is we, you know, try to buy in a downtrend, thinking that it can't go up any higher. And I'm not saying that you can't do counter trend trades, because we talk about doing counter trend trades quite frequently in the classes. But if initially, especially as new traders, we focus on what the direction is, and then we start to look for opportunities to trade within that trend, we're going to find that we are going to be more successful, at least initially here. One thing, and this is just a word of caution, when we start to play around with indicators, we can run into an issue that we call over-optimization of that indicator. Meaning, I could go and I could find an indicator, or I could, you know, do a back test on the indicator and come up with the perfect indicator based off what's happened in past history. Typically, that can be an issue because it generally will not continue to work the same going forward. So we have to make sure that we don't over-optimize things and don't get so concerned with the creation and the development of a strategy that we lose the main idea of what we're trying to do, and that is to get in at a good point and to get out at a good point. What I want you to get out of this today, guys, is that, you know, with indicators, they can help us identify lots of things. They can make things either more simple for us to be able to see, or they can make things more difficult. And unfortunately, with a lot of people, when they're developing strategies using indicators, they tend to work on making things more complicated than making things more simple. Just in conclusion here, do we have to have an indicator like this? And the answer is no. So if I got rid of this indicator, would I be able to still say that the price is moving up here and the price is moving down here? And the answer should be pretty obvious. You know, we can see visually that we've got bullish momentum here, and we can see that we've got bearish momentum on this side. So if I didn't have any indicator, you know, we should be able to look at the price action and tell that the price is trending up or trending down. But using a indicator can sometimes help simplify what we're seeing on the charts. And that's one of the reasons why I like the HMA strategy, is because the HMA strategy allows me to be able to quickly pull up a chart. I'm using the 89 again, and see, without having to draw lines or anything like that, that there's bullish momentum. So it's on there as kind of a help for what I'm doing, but also allows a simple way to be able to see the direction that that trend is moving in.